guys ready? All right. Welcome to Forex.Today, the YouTube community of approximately 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of learning how to put together trade plans. Sorry for the odd time, but I've been trading since 5 o'clock yesterday afternoon till just a couple of hours ago, so I thought I'd get my beauty sleep because I want to look beautiful for you. So anyway, apologize for that, but now we got the market open. Things are going. Time to get back on the charts. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Chicka, Slim Shady. If you got a problem, I'll solve it. All right, good. So ask questions, get involved. I will share my 20 years of experience doing this, technically and fundamentally. We can talk about other things, but I don't want to talk about other things right now. But anyways, if you need some help, just ask. Also, in the description below, there are resources that can help you as well. There is a link to my book, to free video training courses, to 65 hours of paid video training courses. You're like, well, how much does it cost? $88 for a year for 65 hours. Technical analysis, fundamental analysis, monetary policy, central banking, macroeconomics. It's all there, man. And legit, serious stuff. Okay, cool. What else? Oh, there's a link to Trader's Way. You're going to need a broker. I find that they open up about an hour before most brokers, which is kind of an interesting advantage. That's interesting, right? The spreads are good. Liquidity is great. The execution speed is awesome. Swaps are amazing. Trader's Way is great. But above and above all of that, I believe in their business ethics. And by the way, Euro Swissy has been tickling all night parity with, so the Euro Swissy all night has been at parity. It was below parity, so Swiss franc was worth more than a euro for about an hour and a half. And then it popped up, killed all the euro short trades, popped back up, but is now back down to parity. You know, what if the Swiss National Bank intervenes again? I'm not saying they will, but whoa, dude, that card might be back on the table. The last time that happened, major brokers around the world went out of business. And my guess on how things work, the only way that would happen is if those brokers were trading against their clients. You know, the whole B-book stuff. So I don't know what those businesses were doing. I don't know their business models. Ultimately, I don't know how Trader's Way organizes their risk and their client base and stuff. Like, I don't know. I'm not privy to that stuff. But I did watch the Swiss National Bank put massive brokers out of business. Tens of thousands of clients lost their accounts. And Trader's Way was totally fine. I mean, so how could that be? How can the big, huge brokers go out of business? Trader's Way is perfectly fine. And when I talk to them, they're like, well, we clear all the trades. We put them in the interbanking system. That's what we do. We brokered them. And I'm like, you don't know how awesome that is. So anyways, tradersway.com. Cool. Oh, and if you like my chart templates, they're below too. Yeah. What's up, JGB? All right. So it was an okay night. I got some winners. I took a lot of shots. So here we is, and here we shall be. So it's very interesting that we're waking up right on the lines, that I left earlier in the day. So trippy trap, but check this out. This makes a ton of sense, doesn't it? So I shorted this several times around 20, I think 25-ish, which was about, the top of this range. And you know what happened? The reason it finally busted out to the upside is I was watching that Euro Swissy. And I was trading Euro Kiwi, Euro CAD, Euro Dollar, Euro Aussie. I couldn't get NOK for some reason. The spread was just redonkulous and it wasn't moving relative to everything else. But what I do want to add here is that Euro Swissy. There it is. That's actually on that. Okay, let's actually make this into a chart. So template, confluence. This, I think, is a major part of the psychology of the market right now. So, let's put this horizontal line. Let's open this up. And we'll put this at 1.000000000. We call that parity. Okay, so you see, so we were below that last night, and I was dumping Euro hard and fast, and then this thing popped up. We farted around, and then, right, and then this happened, and that was sort of like a walk away point. Okay, because I'm like, oh wait, let it go. Okay? You know what I mean? That was my walk away point. So, wouldn't it be interesting if we come back down to that line? Or, in the back of my mind, I'm thinking to myself, is that the Swiss National Bank? This drop down here, did they just say, okay, that's it, buy it? See, the Swiss National Bank wants a weak Swissy. And their largest trading partner is Europe because they're surrounded by Europeans. Switzerland is surrounded by Europe. So they do a lot of business with Europe. So Switzerland exports chocolate, cheese, cuckoo clocks, and watches. And banking services, right? That's still, it's a providing of a service, right? And so when you are an exporter, you want a weak currency so that it's not too expensive for your customers. Okay? But at the same time, you're hoping for a strong foreign currency. So anyways, so I'm sitting here last night, actually outside, which is great. What is it? The beginning of March? I'm sitting outside at midnight, drinking coffee, smoking cigars, listening to CNBC. I got my laptop on my, actually it was Bloomberg. And I got a laptop and I'm trading away and it's, I didn't even have a sweater on. That's crazy. Yeah, JGB's in the house. Okay. Yeah, so anyways, so I'm wondering if there's some S&B buying already. So, I can't really prove it in right this second, but maybe we'll put that on things to pay attention to. Hua? So, if you remember, non-farm payrolls on Friday, and thank you for supporting me on that and being there, backing me up. That was cool. A lot of people are like, "Holy crap! Look at all the indicators. I can't figure it out." So, anyways, let me just clean it up for those who are new. Okay. Just kind of looking at the week here. Yeah. Okay, fine. Cool. For those that missed the first 2 or 3 hours of trading, first of all, shame on you for not doing your job. Second of all, I'll give you an example. I made a scalp on a 1-minute chart, and maybe a half an hour later, I had 150 pips profit. And I don't think I risked more than 10 pips. Is that right on? CNB going to intervene. It's interesting. Well, I can't really trade it, so. But I guess for sort of, you can look at this like the politics of money. That I think that line is important to a lot of different people. So pay attention to that as far as direction and counter direction, if you will. Okay. Aussie was a great opener. Remember, the Asian currencies tend to move pretty well in the Asian trading session. Okay, that's fine. Let me resave this. This looks like it's Confluence. Save template. Confluence. What? The Confluence. Okay, so it opened hot and fast and came all the way back. Well, that's the funny thing on. So on says they announced intervention, but that's a pretty strange thing because central banks, when they intervene, typically don't announce it. Because what happens is traders trade against them. An intervention almost never works. I don't know if it has ever worked, which is kind of funny too. So why did they do it, right? I don't know. I guess it's political. Okay. So going back here, the market opened, okay? And you had about 3 hours. Now, I did on all the different trades I tried basically grabbing like these type of candles. And then it all fizzled out, right? So I tried for that and it just never took place. So now we have this new market open and maybe things are warming up, right? So Euro Swissy, Euro everything, right? So what do you like now? Euro Aussie, Euro Kiwi. Look at that. I got Swissy twice. Interesting. Euro Noki. Oh, look at the spread improve. That's not bad. All right. Which one should we play with today? Actually, this is one that I spent a lot of time on and never quite got what I wanted. So let's take a look at this one again. So the current top here is hourly 55, and this is the old exit, right? So what used to be support may now act as resistance. If you look at the 4-hour, okay, we're basically tickling that future 21 EMA. So now you can kind of rotate into a new idea, and you can say, is the price action conducive for a short? Okay, we've marked our top. Okay, really, I think this is the real bottom, not that one. That was the open low versus a printed low. Okay, and you can see here, if you were ready, willing, and able, you're like, if you were looking at, because remember, this was like monthly pivot points, bearish pivot points, monthly bearish pivot points. That's the projected low or whatever. We blew through that. So this is a role reversal, isn't it? So the theory is you could be ready, willing, and able to get on board on that as soon as you see some evidence. So now the next question is, what do you consider evidence? And okay, maybe a breach, for example. And now you might have scalping plan A, scalping plan B. So, 10 o'clock in the morning, I'm drinking. you know, you've had a long night if you're drinking Diet Mountain Dew at 10 o'clock in the morning, huh? Okay, what do you think? Are you guys thinking like this right now? Are you thinking there was high vol? We've had the counter back, okay? And we have a market open. Are you thinking now, like, do you already have a strategic plan done? Are you now tactically in the game? Huh? Okay. Why CAD? Oil, gold, okay, wheat, nickel. I think all of these are at all-time highs, right? Or, you know, super high, let's just say. Okay. So it's funny, look at the bottom of the chart is 137 57 is the exact way bottom down here. And I was trying this at 137.25. So as soon as I saw the euro crack above the Swissy, I stopped. I'm like, no more. No more. No more. And it went, whoa, right? So pretty good. But now this is Oscar Mike, right? It's on the, right? Now you can do Euro Aussie perfectly. It's the same trade. And Burns says copper as well. Everything. Remember, and at non-farm payrolls, I covered the concept of aggregate demand. Okay? I did a whole day trading meeting 2 weeks ago on, or maybe 1 week ago on industrial metals. Okay. I exited my euro dollar trade with something like 150 pips profit. Based on that conversation I had with the day trading group, right? Industrial metals. I think we even covered that in the swing trading group too, which is cool. Okay. So, but the thing is, are you guys all, do you have a strategic plan for the day? Do Do you guys have a strategic plan? Do you already know what you want to do and why you want to do it? The only thing you're waiting for is the price or the price action. Well, this is a very, very logical price. And now you're just, what price action are you waiting for? Huh? Yeah, that's fine, Richard, right? So like for example, money leaving Europe for commodities. Good. Great. But the thing is, at this point in the day, you should not be like flipping around charts looking for something to do, or even looking at your charts, asking your charts, what should I do today? Okay? So that's, again, what we talked about is this area is an obvious level of role reversal. Okay? Market opens, you top out, and you should already be on a 5-minute chart, and you're thinking, what? Well, there's pretty logical. Down to this range, obviously support, so I've already marked it. Back up again. So a bear would sell, a bull would buy, but a bear is also thinking down here again, right? Okay, maybe even one of these things. Okay, but that should already be in the playbook. You're already on the Fiverr, and you're just trading now. You're just sitting, smoking cigars, drinking coffee, listening to TV. Funny thing about them, like even this morning I had Bloomberg, and they're like, oil has just popped, $14 or something. And no, it's been down for 14 hours. It popped 14 hours ago, right? Like it popped and it's been dropping, and they're still reporting like it just happened. I'm like, honey, that happened on the New Zealand Open. What do you do if it keeps going down and doesn't come up to make a lower high? Then you don't buy it. I guess you want to buy this, huh? Okay. Okay. So the way I have it set up is bearish. Okay. Oh, you mean what if it doesn't do that? Then I guess you don't get it. Or in the day trading group, I spent a lot of time, and we talked about it last night actually, how to get in a trade aggressively, and then how to aggressively manage the risk. Okay. So you're like, what if it doesn't come back? Okay, well, remember your strategic plan started way up here on this orange line, right? Down, 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 up, up, down, 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 up, up. Oops, it's already changed, but even look at the role reversal. Support, resistance, sell. Okay, lower, low, support, resistance, sell. Lower, low, support, resistance, sell. Lower, low. Okay, what if it doesn't come back? What do you mean? It always comes back. Brooke! What's up, BT? What's up, tough guy? Okay? Dude, it always comes back, yo. Okay? Okay? You just got to find your magic. You're like, but Wayne, it's so risky with the high volatility like this. Yeah, I know, right? Manage it. On says, didn't you tell us you don't trade crosses? I say I prefer not to because I'm a macro trader. But when I isolate, that's the only way to do it. Okay, on? So I wake up and I'm like, I wake up. I log in at the market open on Sunday afternoon like I always do. And I'm like, I wonder how the war in the Ukraine's going. And Euro was in a bloodbath. Okay, on? So I'm like, I text my wife. I'll share the family text. Markets are on fire. I'm making coffee. I'll be up later than usual, aka 4 o'clock in the morning. That's in the afternoon, right? Like, just shut the shit down. Life stops. Euro's on fire. I gotta get heavy. Okay, on? And so my first thing is, where's the money going? Who's going to benefit? Who's going to lose? Okay. Commodities up. Boom. It's Asia. I want Aussie. I want Kiwi. Boom. And then I open the chart and then that's it. Fire for effect. Okay. Then we log into the day trading group, right? I'm like, my alarm's going off. Bing, bing, bing. I'm like, oh, the day trading group, right? Like, so I run inside because once again, I was outside. So I spent like I've spent half my life outside now, which is great. Because I got to get out of the office. So I go all the way over there, which is great. But everybody logs in. I'm like, give me your Euro trade plan for today. We just burned through about 5-6 people. I think we were done in 30 minutes. I'm like, because, dude, I got to go, man. Well, these markets are moving, right? So we would just run. And I'm like, how do you get the first one? How do you get the second one? How are you going to handle the stop? Where's your target? Where's your better target? How do you take it around? Where are you going to take profit? What if it don't work? Great move. Next, give me another trade. And someone else logs in. They set it up. I'm like, give me a Euro. Sell Euro. Find me a way to sell Euro. What do you got? Euro CAD? Good. Set it up. Plan A, plan B, plan C. What are you going to do if it doesn't do this? What about that time frame? Where's your stop? How are you going to manage that? Great. Okay. That's what we did last night to make sure we were ready for all of this stuff. Okay. And because we're so good at price action, you start to see when things change and you throttle back. So you might have this as a resistance level, okay? Down, up, sell, down, up, sell, down, up, sell, down, up, out. Or for me, stop, sell. Hey, I'm not stressed. I'm good, man. It's just I didn't sleep very much, that's all. No, I'm all good. All good here. Cool. So anyways, I'll drill in. You need to be making these decisions now, okay? Like, for example, connect this. Is that a line for you for selling? Is this a line for you for selling? Are you a seller? I guess. I mean, again, you should already know that. Okay? And then what time frame, how aggressive do you want to enter? Okay. Barb brings up Twitch. You know, I streamed on there. I probably did 100 streams, and no, there didn't seem to be a lot of traders. I mean, obviously it's a gamer platform, right? No, there didn't seem to be a ton of interest. Yeah, I'm not against it. In fact, for whatever reason, it doesn't broadcast there anymore. I can take a look into it, and if you prefer that platform, I'm perfectly okay doing that. Okay, you looking for 1 minute rotation here? Should I buy or should I sell? Why don't we do a poll? What should I do? Buy now, sell now. Wait. Let's just say wait. Richard says, I'm looking to sell all Europe. Totally. Absolutely. Absolutely. Matrix, liquidity is provided by liquidity partners. Okay. I think the BIS is where it's 7-something trillion a day, almost 8 trillion a day. Oh, let's not do a full standard lot. Just want to make that come out. Pretty close. Okay. Okay, 51 said sell now. 42 said wait. Okay. So I think the play that the 51% are playing is something like that. Okay, a lot of congestion, huh? Right in this area. Now the psych level is up there. This is 39. Okay, so you can see this is the psych level right there. So that's what's going on there. So that's probably plan B for most. What was the auto stop set to? 15, look at that. It's a 15 pip stop. I guess it makes sense. I don't remember doing that. Yes, it's called FX Bootcamp, Barb. It's $88 a year to join, and then you can upgrade your account. Okay, we're BE. Okay, you can see we analyzed the support and resistance properly. There's support down there, you know, there's this going on here. Okay, and now it's bulls versus bears, right? To the toolkit, you pay $5 and you get access to the toolkit. Now, this template is just something I built to help train people in the day trading group on price action. It's not on MetaTraders. Some people seem to like it, so maybe I'll get around to it. You know, when I'm getting more than 4 hours worth of sleep. Yeah. Okay. But you see, like, some people get really excited. They're like, oh, all these little lines, it makes it so easy. You're supposed to be doing this anyways. And I'm not a big fan of tools doing work for you. I mean, it's going to be efficient. But if you're not, like, if I've taught you how to do price action, okay, and you're not marking support and resistance, then I don't know what you're doing. Right? And so this little tool is just looking at a couple and it's kind of showing you these rollover points. But you're supposed to be doing that anyways. Like, how do you trade if you're not doing that? So this is sort of like, I don't even think it does a good job of it, but it does a good enough job to just say, look, these are little pieces of price action, right? Okay. Oh, little buy orders in there. Huh? Buyers are in there, huh? Little buyers. Okay. They're doing the opposite of a bull, of course, and they're looking at, you know, using that as a support mechanism, or they might be doing like an inverse head and shoulders type thing where they kind of, no, farther back. They're kind of, well, okay, they're kind of playing it that way, but probably not. I don't know. Okay. Probably the moment of truth here. Again, what I'm suggesting is there's different forms of inverse head and shoulders, right? And so it's either the right shoulder or it ain't the right shoulder, because then the next thing would be double bottom, right? There's only three outcomes, right? There's a lower high, double bottom, and then a lower low. So if it's going to be a lower high, that's the inverse head and shoulders play. Okay? Oops. So with that, that means on the scalp, risk is increased a little bit. So like I can move this in tighter, and now we're only risking 8 pips. Because now, if you were measuring this out, you're going to say that's the neckline, and you're up there, and that would take you out on a stop, and then probably drop back around too soon. So then you're like, well, I'm going to half it, right? Okay. So again, when you're scalping or when you're aggressively entering in trades, you got to aggressively enter, but aggressively manage. Okay. Shows you why it's better to be up high than down low, right? Because I think on the higher time frame, right, we all see this. So I think a lot of people will have this as a plan. There's either that, right, or the other real plan is this one, right, bigger time frame. So this is a bit iffy. Okay, it's better to start at the market open, not an hour and a half after the market open. Right, but anyways. Oh, it's 4 sessions. You're talking about this indicator 4 sessions. Yeah. And you probably have a template called, let's see, trading sessions. So because there's an X there, that's telling me that it's in the complete toolkit. Okay, let's go back to scalping. Another thing you need to decide on is what time frame do you like best? Do you like 5-minute charts when scalping? Do you like 3-minute charts when scalping? Do you like 1-minute charts? What's your periodicity? Hey, by the way, did you hear the Indian rupee hit like the lowest level ever or something? Huh? So again, the risk here is that head and shoulders pattern. Okay. Remember, plan B is way up here. This was A, 51% had voted for that. B is up here, plausibly the same trade. Now, you could say, why take the loss, Wayne? Now, why not put the stop here and incorporate A and B in the same plan? Well, first of all, I don't consider that a scalp because you're going against price action. So you don't want to sell higher highs, for example. Okay, you want to sell the turn at resistance. So at this, plus, I'm risking 8 pips now. I'd have to risk, 25. And all of a sudden, 25 pips stop is not necessarily a scalp. Okay, that's sort of an intraday. So I just want to make sure we're speaking the same language here. I don't want to sell higher highs. So if it's up here, it's a higher high. Oh, look, it took me out. Actually, I probably jammed that too close. Sorry, it's hard to do both, right? So the plan here is, right, if that doesn't work, then you don't want to be short a higher high. Okay, boom. You don't want to be short a higher high. So now you got to wait, and now it's going to go up, up, up. Your next level is plan B, as we already discussed. You're going to get close to 1.39, big psych. And on a 1 minute chart, you're going to then go on red alert once you're up here, and you want to look for something like that. Okay? Which sets up the new sell, 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 sell. Or not. Barb says, well, if you look at the daily wick, well, that's not what we're doing here. This is price action on a market open. Okay, not a position trade. Okay. Okay. I mean, it's logical to do things like, oh, I want to sell it here, or, oh, I guess the next one's probably pretty high. I guess if you wanted to call that 4 hour, let's do that on 4 hour. Yeah, well, that ends up being kind of the same. It's just no longer a scalp, right? That's all. Okay, you got to isolate this. A scalp, you might be short for an hour, which is irrelevant to your daily chart, right, Barb? This could fall for an hour and then continue mission back up, right? Like your candle might be formed like this. Okay. And, but this, right? But whatever. We're mixing time frames, that's all. Yeah, but this is, you're right, on a higher time frame, this is a fascinating formation, but it could still do one of these things before it really recovers. Okay. Can you use a fib for a scalp? Well, the fib is just showing you pullbacks. So going back to like a 15-minute chart, let's say, or even a 5-minute. Let's go back to the 5-minute. What is the Fibonacci doing? Well, you're measuring pullbacks, right? But that's what price action is too, if you think about it, right? Or wave counting. They're just helping you identify, okay, right, pullbacks. So could you do a Fibonacci between here and here, and it does, 382, 50%, 618? Yeah. I'd rather you just eyeball the support and resistance. But if you connect this as a zone, and you connect this as a zone, and these tops and those tops and these tops and those tops, okay? Could you use Fibonacci? Yeah, but the problem is you end up waiting for the exactly, let's say, 38.2%. And what most people miss is it only comes back 35%, and then you don't trade it. Okay? I'd rather you say, okay, we got that roll reversal, we got that roll reversal, we got this one, there's this whole zone. Oh, by the way, that would all be Fibonacci. But I'd rather you eyeball it yourself. Instead of get hung up on the percentage, look at the price that was important in the past, and you get your slingshot. Okay? And what I've taught you in the past is you get a new higher high. So the first thing you do is you look for a higher low. So you look left, not necessarily Fibonacci. Yes, you could fib this sucker, but I'd rather you look left and you say, oh, that was interesting. That was interesting. I wonder if this price in the future will also be interesting. Okay? And you'll find it's probably a 382. Great. But I would put price action above Fibonacci because Fibonacci is very subjective. Some people, right? Let's say we had 100 people here and I say, draw a Fibonacci study and then turn it in. some people, let's do this in yellow again. Some people will measure here to here and find this to be an entry. Some people will measure here to here and find that a different type of entry, right? Some people may be doing it wrong. Well, that wouldn't have happened yet, but let's say from this top, people might be doing something weird like that. I mean, you're going to get mistakes and all kinds of weird things. My point is it's subjective. And so what is this now? Is this a new fib for you? So you bought this because it's 618? Okay, maybe. Yeah. Okay, maybe. But it's subjective, right? But it's not subjective to say, okay, price, okay, you see these little, right? I'm playing off the wicks here. And then how about this? I don't find this subjective. Okay? But you're right. We have a giant hanging man right now. And it says this dropped like a ton of bricks, and either all the bears took profit or we hit a ton of buy orders. But does that mean we cannot make a lower low? All those orders are out, and then bears come back in because the war gets worse before it gets better. That's going to be your alpha, huh? The 100-year history of gold. Yeah, well, I don't know if that's a book, but, obviously gold goes back thousands of years. Okay. I think in my fundamentals course, which covers monetary policy, we start, I think, in lesson 1 in Sumar, which is in present-day southern Iraq, and the Sumerians were the first in recorded history to, trade sort of paper money based on gold deposits in a vault that someone was protecting for them, aka a banker. And then later on, the banker realized nobody actually knew how much gold there was. There's just these paper deposit slips would come back and forth, back and forth. And so then they realized, look, we got all this gold. Nobody actually comes in and asks for the gold. The gold just sits in the vault. But a piece of paper will come in and said, Jim gave this gold to Nancy because Nancy provided a product or service. So now you got to go and take some gold from Jim's pile and put it in Nancy's pile. But Nancy never comes in. Jim never comes in. It's just a piece of paper. So then the Sumerian banker said, well, wait, now no one actually comes in for the gold. We can also lend this gold out. So then someone else comes to the bank. They're like, we need to borrow some gold. Okay, here's some gold. Here's an ounce of gold, but in 30 days, you have to give us 2 ounces of gold back. Right? And all kinds of interesting, fun things started to happen, and modern fractional reserve banking was invented by the Sumerians, but I don't know what year that was, 4,000 BC, 3,000, right? Okay. By the way, did you notice it just dropped from like 90 something? Look at that. Chow. Okay, bigger trade. Now here's the new, okay, here's the new test. Okay. Now a bull could be doing a Fibonacci study, but you wouldn't need to. Bro. This dude, bro. All right. Okay. Here's the test. Bad place to sell. A little early for a buy. Okay. Moment of truth. Once again, price action. We're not looking at anything except price. Yes, you could use a, right? Yes, you could use a study. Oh, well, that's hard to see here. Okay, but it's, I don't think, I mean, it's a 618, and you could say, well, it's going up because it's a 618. Okay, that's cool. Okay, I'm not here to say you're wrong. I'm saying you don't need to draw the study if you're just looking at that. Okay, what you're looking at is higher low, higher high, higher low. And now if you're a buyer here, you're projecting a higher high. Will it do it? Oh, we don't know. But here's the thing. What is a bear thinking? A bear is thinking double top. Oops, that's supposed to be a D. Double top is a trade for them. So if the bears fail to do that, of course, you're going to get the higher high. And a lot of the higher highs are coming from all the stops. So for a bear who sold here, where are their stops? Right? So if it pops up, ciao, you'll take out these stops and you'll get your higher high. Remember, the first, like this move up has more to do with our stop on the short than bulls buying, because bulls don't buy high, bulls buy low. Okay? If you buy high, you're broke. You're not a trader, you're a liquidity event. Traders don't buy high. So what's happening is you're benefiting from the stops. So one of the things I've been talking about now for a little while is this concept, and I don't know if it's confusing, but this idea like this is bears buying. Okay? The upward move is bears buying. And you're like, Wayne, bears don't buy. Yeah, they do. They use stop losses. Because you tell the broker, sell here and buy here. So, right, you're profitable, you're profitable, you're profitable, you're profitable, and then you're offset. What does offset mean? Well, you had one lot short, and because of your stop loss, you have one lot long, and when it pops up, your buy order is hit, right? So you have one short long. So anyway, so it pops up, hits your buy order, putting you one lot long, and now you're offset. You're neutralized. And now you're out of the market. But you still have buy orders. Okay? So, okay. But what about now? Are there buyers here? Yes, because buyers buy low. Okay? This is not buyers because that's high. They only buy low. Okay? So it's kind of an interesting concept. Psych level. Yeah, just looking at this sat there all those hours. Then I'm like, no, forget it. Forget it. You got to know you're out. Matrix like trapped in the middle. Yeah, well, you got to be high or you got to be low. Okay, moving down. Continuation to the downside. Okay, there's another little challenge. But now, this is interesting, right? Because now you got your lower high. Crispy says, how long did it take you to become profitable? Profitability wasn't the first goal. The first goal was to make more money than my venture capital job. Also compensate me for the risk of not earning a paycheck every 2 weeks guaranteed. And I had to cover things like health insurance and retirement. So it was more like, how do I get there? Because I have to give up a kick-ass job to become a Forex trader. So that, to me, profitability wasn't the target, right? But to say it maybe differently, I did trade a demo account for 2 years. So maybe that's an answer. Okay, you see how the price action works? Okay. Again, if you're a seller at high levels near resistance, okay, or a buyer at low levels at support, this is just scalping a 1 minute chart, right? So like you take an 8 pip loss here, and then this one works, and then and the thing is, if you clear your mind like a Jedi, you focus on your intent. Remember, there's plan A, remember, and plan B, okay? And now this might be your modus operandi for now, okay? Or the interesting thing is, because it's a market open, okay, you're looking at things like this is your plan A sell, because this, remember, that's obvious resistance. Remember, I have to put on a pivot points to show you, but like that's like stupid obvious, right? And so now your next rotation is here, okay? So to use right, this is the basic strategic plan. Remember, you got to have your strategy first. And so you let's say you got one up here somewhere, okay? You got one sell. And then you tried this one like we did. That makes sense because that's an aggressive trade. It makes sense. Dude, we're scalping, okay? You're not getting perfection. And so you lost 8 pips there. And then it goes up to the next plan, which we called our plan B at the psych level, rolled over, okay? And now you got your second one. But the thing is, you're going to let it run, right? Now it's your day trade. Okay. And of course, now you got this one jammed. Maybe this one's jammed or close to it. Okay. You could even have a small profit on this one and then this one with a small loss, they offset each other, right? This one, you're locking in 8 pips profit, and the other one you're locking in 8 pips loss. So if it does this now, you offset. I don't like doing that. I don't care about, again, the 8 pips. So I'd rather have one at -1 even, and the other one at -8. Okay. But the thing is, you're scalping into your strategic plan. And like I said right at the beginning of this video, you got a strategy, right? Whether this is Euro CAD, Euro Aussie, Euro Kiwi, Euro Swissy, Euro Pound, Euro something, you got to have a rationale and a reason and a focus for what you're doing. And that you can explain the story to somebody, right? And that's your strategy, first and foremost. And that sets up let's say, the dialogue for the day. What are you going to do for the next 2 or 3 hours? Oh, well, I'm selling Euro CAD. Why? And you have an answer. And you can drill down now, even if you're a swing trader. Like I said last night, I scalped on a 1-minute chart. It didn't even make a lower high. I trapped it on a 1-minute chart, traded a little break, the tiniest of little breaks, and scalped 150 pips. So to me, a scalp isn't the fact that it doesn't make much money. I hate trades. I hate trades that don't make any money. You took risk for what? 15, 20 pips? Dumb, in my opinion. Okay. Now you might do one of these things where you sit here all day and you're doing 20/20 OCOs. Okay. And sometimes that's good for training. Sometimes that's good for rebuilding confidence. Sometimes that's good. You're just bored. Okay. But ultimately, I'd rather you do, let's say, 20 by 50 OCOs. And then if you're scalping, do you really need 25 pips? No. So this one was set at 15 pips, remember? So let's say you do 1550 OCOs. Okay, 1545, 3-to-1. Better. So, this one's going for, right? So as you build through your day, because your strategy is set, so now it's tactics and technique, right? Maybe you have one here. The stop is currently at break even, and you're going for plus 45. Cool. Now you got your second one here. Okay, you got that one at break even, and that one's going for plus 45. And you just keep doing the same. Now we know this is supposed to make a lower low, right? So if it doesn't make a lower low, that's going to be a problem. So it has to do that, okay? It has to do like this or like this. So that's the risk. What if it don't? Yeah, what if? What if it don't? What are you going to do? How are you going to manage that stop? Sometimes just packing and stacking, right? You're going for 45 here, going for 45 there, going for 45 there. You can just set and forget, right? Okay, and by the way, this has dropped almost 45 pips already, just scalping. Do you guys like trading this 1-minute chart? Okay. Yeah? No? Yes? Lucas, yes? Okay? Remember, I don't consider it trading. Like, we're not making a canoe here. We're carving wood. Now, eventually, the piece comes together and you have a canoe. Right? You see, like, it's just a tiny part of the bigger value creation. Okay? So, going back to the Fibonacci, do you fib this down? I don't know. The thing is, on this chart, it's not actually a trend because we have not made a lower low. So this could go from, let's say, a bottom trend to up, right? So you want to pay attention to the layers here that would, act as resistance against the bears, but also noting that is straight up shithouse, a support line, right? I don't know where straight up shithouse comes from. But it was funny. Okay. So really now you're trapped, right? Okay. You're trapped. Okay. Double bottom and lower high. And looks like bears might be winning this. Boom. Just like that. Don't need a fib. Okay? So now it'll be really interesting if we can maintain, if we can get this just lower, there may be some bulls that have stops down there, right? So, let's say, like, I want you to think about this, okay? If you were a bull and you bought here, maybe because of Fibonacci retracement, okay? I'm not picking on it. I'm like, that might be a real reason, okay? Where was your stop originally, and was it moved as we went up, or has it been moved since it's come back down? Where are the stops? Okay. Oh, you're throwing, yeah. I mean, I'm only doing price action here, huh? How many times did I get people telling me, you have too many indicators? All right, I have no indicators. Okay. I can tell you, because I don't have all my indicators, I use certain indicators at certain times. I'll just glance with my eye. I only look at what I need. Okay, a pilot's not staring at all the buttons all the time. But pilots have a lot of buttons and little knobs you have to turn. What does that do? Don't touch that. Most of the time you don't touch any of them. Some buttons you might not even know what they do anymore. You're like, I don't know what that is, but I've never had to touch it. Okay? So I don't mind having access to that information. So yeah, where are the daily pivots? Where are the weekly pivots? Where are the monthly pivots? Where are the moving averages? Where are the oscillators? I might, my eyes might go around the chart all the time, but for some YouTubers, they can't handle that. So I get told I'm an idiot because I use a lot of information to make decisions. Okay. So now I still have enough to make decisions, but I feel a little naked. I feel vulnerable because I know there's important information not on this chart. Okay. Okay. That's an important line, obviously, huh? You have to understand, if a bull is buying here as a double bottom, they're projecting to all the way to the top, aren't they? I'm trying to get you to think about the objective of both sides of the equation. A bear is thinking lower low. You want me to buy at the double bottom? Okay. Okay. What I'm saying is, a buyer down here, their first objective is the top of the range. What's up, Maida? Okay. Okay. A bear is much different. Okay. Because they don't want it to go that high. So you got a real fight if that's what you're doing. Okay? You're going to have a real fight, and there's probably a lot of stops here. So what you'd probably get if you're a bull playing the double bottom, the price action you'll probably get is fart around, then it comes down, and then fart around, and then it comes down, and then the moment of truth, and then it goes boom, 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 and you get there really quickly, and then probably a big turn like we got here, because that's where bears would sell. Where's your stop? Okay. Pissy little scope. I don't even need that. Okay. So, what are the key components? Because I'm going to leave you guys soon. What are the key components? You must know where bulls are buying. And their objective. Okay? And maybe you write all this down again. Bulls buy double bottoms, right? Is this going to last? I don't know. If you're a bull, though, that's that. See, I'm not actually a bull. Okay? Bears sell double tops. Okay? So they sold that. Okay? So you got to be careful in the middle. Look at it, right on my line, yo. Okay? So one way to look at this is, once there's a breakout, then bears sell. Let's do this in pink, okay? On the breakout, bears sell. So we'll put this break out. Okay? Bears sell lower highs. Bulls buy higher lows. So let's back out of the 1 minute chart. We'll go way out to the 5 minute chart. Okay? And one of the things I have here, let me get rid of this. Okay? And let me get rid of that, because that's just highlighting the basics of what I already got going. Okay? Let me get rid of that. Too many indicators. All right, so I got 2 lines in the sand. And now you can play with this the rest of the day. Okay? Like, again, bears sell high. Bulls buy low. And now the next play of the day is something like that. Oh, wow. Something like that. And your entries are probably looking like this. Shilva says, yeah, Russia gave terms of surrender to Ukraine. Yeah. Lay down all your weapons. Get out of the way. Give us all your crap. So that won't happen, right? Like, but I hope for peace. Okay. So what do you think of that? Was that helpful today? Remember, all of this starts with strategy. Okay? You have to have strategy first, but even on a 5-minute, okay? Higher high, do bears sell higher highs? No. Higher high, do bears sell higher highs? No. Do bears sell double bottoms or double tops? Potentially. Okay. Do bears sell higher lows? See, to me, Fibonacci wouldn't have helped you anywhere in there, but price action does. Okay, so you're either waiting for that because of the obvious resistance. Again, when you add pivot points, that's obvious. So that might have been part of your strategic plan. I'm telling you for sure. I watched it all last night. I was 50 pips lower than this, and I knew that price. I mean, dude, seriously, I knew that price 12 hours ago. I was at my charts, and I'm like, "Ooh, look at up there. That'll be interesting." Okay. And in fact, if I remember correctly, it was sort of a double toppy. Yeah. Jesus, Murphy. Like, yeah. Okay. So, so you could be in on that, but let's say that's a little too aggressive. All right. Well, use price action, and you got yourself in here somewhere, right? Cool. And now you hang on. What are you going to do the rest of the day? Well, I got my trade in. I'm trying to hang on, see if I can get a lower low here. Okay. And you know there's no more bulls until here. And then where are the bulls? 38 maybe? Was there any price action on 38? Yeah. Well, bottom of this. Yeah. So we got some here and here and here. Okay. So I always tell people, do your job. Okay, mark these, leave little love notes for yourself. That's an interesting price. Okay, I'm going to connect all this kind of stuff. All right, well, that seems to be interesting. Somebody cared about that. Oh, apparently that's the psychological level. Would you mark this level? Yeah, for sure. Do you think a bull would trade sort of a hesitation here? Yeah. Well, all right, so there's the downside. Where's the upside? Okay, let me move everything over. What can we connect here? Well, you see this, and then that, and that, and that, and that. Oh my God. Seriously? Okay. Stop it. Okay, cool. So we got that, and maybe we can go a little higher, but then, yeah, I probably, okay. All right, so anyways, all right, cool. Well, we're stuck in the middle here. Gotcha. Okay, so we got to wait. So again, now I'm looking at the two red lines that maybe set us for a breakdown or a break up. And then you go back to your 5-minute scalping price action. Oh, you sold Aussie dollar. Yeah, I took profit on that last night. Yeah. Let's just take a look at some of those. I need to get back up to speed. Kiwi's good. Pound Aussie's interesting. Aussie Swiss franc, that's not rotating. Let me update it. I'm going to look at daily here. Oh, interesting. Got to worry about that intervention, maybe. I don't know if I'm making a big thing. Okay. Interesting. All right. Cool. Oh, yeah. Oh my God. So you got out of that, huh? Holy schnicker schnacker. Good. Yeah. Oh, look at this, guys. Bullish profit zone aggressive. Okay. Big target, little target. Look at that cluster. What more do you want? Gee whiz. Is anybody thinking stairs up, elevator down? Yeah, me neither. Yeah, one of the things I'm interested in, which I think will lead to an interesting play, is the pig. Pig down, pig down, pig down, pig down. Let me catch that up. Pig down across the board. Okay, cool. I'm interested. So I'm right. It's like okay, it's down, right? Or is it? So you start doing similar analysis. It's not quite right because they're not real prices. It's an index and it's complicated because you got cross prices and all kinds of stuff. But, you know, I see the risk. Bank of England has 5.5% inflation. Okay. The UK actually does import quite a bit. High interest rates. See, like, for example, if a country imports quite a bit, they want a strong currency. Sound as a pound. Sound as the pound. Think of it. We have Canadian dollar, but we have the great British pound. It's great. I mean, you could call it just great British pound, but it's greater than that. So anyways, they probably want a strong currency because the strong currency does two things. It pays for imports, which they and those import prices are up. So to have a strong pound would address that directly. But also, it's deflationary. So whether they get that right, so despite the sort of economic challenges we have, right, sterling, which is nice, but it's not backed by silver. I think that does not come from when it was backed by silver. So anyways, so most central banks are, well, like ECB can't do anything. The Fed's going to raise interest rates, but modestly. We we know that it's 0.25 and not 0.5. Okay, great. So maybe we throttled back. Maybe we've dialed back. We've gone from 7 to 5, whatever. So we're adjusting here. Bank of England was in this process where they were going to be aggressive. And now our question is, can they still be aggressive? And maybe if we kind of do a deep dive in the thought process, maybe more than ever they need to raise interest rates. And, and they continue and stuff. And so that might be needed to be priced in. And right now, this is not benefiting. Obviously, it's not benefiting from the situation. But maybe Great Britain is positioned in a way where they must make some changes in their imports and their exports. Like they got to cut out Russia. But maybe they're way better positioned than Europe is, right? There's no quick fix in Europe. But maybe England can do that. Plus, they already have their own North Sea oil and all that kind of stuff. So maybe we kind of get through the exogenous shock aspect of the war and sell everything attitude, and then instead say, okay, this too shall pass. And maybe Great Britain is something. So I don't know. I'm thinking a lot about, should I do a Fibonacci? Right? Should I be interested in this asset class? Right, it's not catching up. Maybe I have to do 5. No, I can't even handle 5, huh? There you go. Okay, so I look at it, it's down now. I get it. Okay, but maybe a bull could buy a double bottom. A bull doesn't buy a lower low. A fool buys a lower low. A degenerate gambler buys a lower low. Okay. Okay, but that's a big but, I know. Oh yeah. Okay, look at that. So this gives me permission to look for and identify a reversal pattern. Think of it as drilling for oil. Before you just start putting drill bit to soil, you have to do some research and analysis. And you got to be in the right place. And a geologist can just walk into a field and say, no way, Jose. Or, yeah, maybe. Okay? Apparently, when the British first entered the Middle East, they were going through the Persian Gulf, and they were just on the side of a ship, and they could tell by the type of rolling hills that there was likely oil there. They could just look from the boat. They didn't even need to do much research. They're like, the way that does, this is going to go this way and that, and there's blah, blah, blah. So you can step on land and say, yeah, there's probably oil there, or there's no way, or maybe, okay? But then you can do a little more, do some soil samples, great, but then you can use like the radar and the other apparatus that kind of can look for cavities below the surface. So you're like, ooh, there's some open space here, or it's sandy, loose, not clay, not solid rock soil, but then, you can see about 150 feet down, you hit bedrock or something. You're like, well, so if there's oil, it'd be trapped down there or something. And you can go through and say, yeah, you know what? Based on where we are and what's around us and the geology and then our ultrasonic tools that are looking down there. I think you use electricity too. You put in some probes and connect them and all kinds of things where you can basically see underground and just see there's space or there's looseness or there's something solid. Okay, that would trap things above it, right? And not permeate through. So anyways, you can go over there and you can say, drill here. I'm in that process where there might be oil in this field. I see it, okay? But I'm testing and testing and testing and testing. I'm testing and testing. Okay? It wouldn't be interesting, let's say in a week, I see something. Drill. Maybe. I don't know. Okay? That's for me. That's food for thought for you. Peace on earth. May the pips be with you. May our profits be above average. I'll see you tonight in the Asian session if you're in my day trading group. Also, the group also trades pre-London live. So Asia Open, European Open. Huh? It's not bad. 10 times a day or 10 times a week. It's pretty good. Yeah. Peace on earth. May the pips be with you. May our profits be above average. If you need help, there's tons of resources. All the links are in the description below the video. How much for the day trading group? Less than $1,000 a month. Yeah. Less than $500 a month. Less than $300 a month. Okay? Join FX Bootcamp. See you tomorrow, or see you later, guys. Cheers. Beep.